Chapter 9. The overall turnover of the capital advanced. Turnover cycles. We have seen already that the fixed and the fluid components of productive capital turn over differently and in different periods, just as the various components of fixed capital in the same business also have different turnover periods according to their different lifespan and reproduction times. On the actual or apparent variations in the turnover of different components of fluid capital in the same business, see heading 6 at the end of this chapter. 1. The overall turnover of the capital advanced is the average turnover of its different component parts. The mode of calculation is given below. Insofar as only different periods of time are involved, it is of course perfectly simple to take their average. However, 2. There are not only quantitative distinctions involved, but also qualitative ones. The fluid capital entering the production process transfers its whole value to the product, and must therefore be constantly replaced in kind by the sale of the product, if the production process is to continue without interruption. The fixed capital entering the production process transfers only part of its value, the wear and tear, to the product, and continues to function in the production process despite this wear and tear. Hence, it only needs to be replaced in kind at shorter or longer intervals, in any case not as often as the fluid capital. This necessity of replacement, the reproduction period, does not just differ quantitatively for the different components of the fixed capital. As we have already seen, one part of the fixed capital, of longer durability and fixed for several years, can be replaced annually or at shorter intervals, and the old fixed capital added to in kind, while with fixed capital of a different sort, the replacement can only be effected all at once at the end of its life. It is necessary, therefore, to reduce the separate turnovers of the various parts of the fixed capital to a similar form of turnover, so that these differ only quantitatively in the duration of their turnover. A qualitative homogeneity of this kind does not exist if we take as the starting point P to P, the form of the continuous production process. For some elements of P have to be constantly replaced in kind while others do not. Let us take a machine with a value of 10,000 pounds, for example, which lasts for 10 years, so that 1/10 of it, 1,000 pounds, is transformed back into money every year. In the course of 1 year, this 1,000 pounds has been transformed from money capital into productive capital and commodity capital, and from this back into money capital. It has returned to its original money form, just like the fluid capital if we consider the latter in this form, and it is immaterial here whether the money capital of 1,000 pounds is transformed back again into the natural form of a machine at the end of the year or not. In calculating the overall turnover of the productive capital advanced, we therefore take all its elements in the money form, so that the return to the money form concludes the turnover. We always consider the value as advanced in money, even in the case of a continuous production process where the money form of the value is only that of money of account. We can then take the average. 3. It follows that even if by far the greater part of the productive capital advanced consists of fixed capital whose reproduction time, and therefore turnover time, makes up a cycle of many years, the capital value turned over during the year by way of repeated turnovers of the fluid capital may be greater than the total value of the capital advanced. Let the fixed capital be 80,000 pounds, and its reproduction time 10 years, so that 8,000 pounds of this annually returns to its money form or completes 1/10 of its turnover. Let the fluid capital be 20,000 pounds, turning over 5 times in the year. The total capital is then 100,000 pounds. The fixed capital turned over is 8,000 pounds, and the fluid capital turned over is 5 times 20,000 pounds, equaling 100,000 pounds. The capital turned over in the year is then 108,000 pounds, 8,000 pounds greater than the capital advanced. 1 2/25 of the capital has turned over. 4. The value turnover of the capital advanced is thus separate from its actual reproduction time, or the real turnover time of its components. Say that a capital of 4,000 pounds turns over 5 times in the year. The capital turned over is then 5 times 4,000 pounds, equaling 20,000 pounds. But what returns at the end of each turnover, to be advanced once again, is the originally advanced capital of 4,000 pounds. Its size is not affected by the number of turnover periods in which it functions anew as capital. We again disregard surplus value. In the example under heading 3, we have assumed that at the end of the year, there returns to the capitalist a value sum of 20,000 pounds, which he lays out once again on the fluid components of capital, and b a sum of 8,000 pounds which is separated off from the fixed capital advanced as a result of wear and tear. The same fixed capital still continues to exist in the production process, but with a reduced value of 72,000 pounds instead of 80,000. The production process must thus continue for 9 years before the fixed capital advanced has come to the end of its life. No longer functions to form products or value, and has to be replaced. The capital value advanced has thus to describe a cycle of turnovers. In the given case, for example, a cycle of 10 annual turnovers, and this cycle is in fact determined by the lifespan and hence the reproduction time or turnover time of the fixed capital applied. To the same extent as the value and durability of the fixed capital applied develops with the developments of the capitalist mode of production, so also does the life of industry and industrial capital in each particular investment develop, extending to several years, say an average of 10 years. If the development of fixed capital extends this life, on the one hand, it is cut short on the other by the constant revolutionizing of the means of production, which also increases steadily with the development of the capitalist mode of production. This also leads to changes in the means of production. They constantly have to be replaced because of their moral depreciation, long before they are physically exhausted. We can assume that, for the most important branches of large-scale industry, this life cycle is now on average a 10-year one. The precise figure is not important here. The result is that the cycle of related turnovers, extending over a number of years within which the capital is confined by its fixed component, is one of the material foundations for the periodic cycle in which business passes through successive periods of stagnation, moderate activity, overexcitement, and crisis. The periods for which capital is invested certainly differ greatly and do not coincide in time. But a crisis is always the starting point of a large volume of new investment. It is also, therefore, if we consider the society as a whole, more or less a new material basis for the next turnover cycle. 5. On the mode of calculation of the turnover, we will let an American economist have his say. Quote, in some trades, the whole capital embarked is turned or circulated several times within the year. In others, a part is turned over oftener than once a year, another part less often. It is the average period which his entire capital takes in passing through his hands, or making one revolution from which a capitalist must calculate his profits. Suppose, for example, that a person engaged in a particular business has 1/2 of his capital invested in buildings and machinery, so as to be turned only once in 10 years, that 1/4 more, the cost of his tools, etc., is turned once in 2 years, and the remaining 1/4, employed in paying wages and purchasing material, is turned twice in 1 year. Say that his entire capital is $50,000. Then his annual expenditure will be $25,000 divided by 10 for $2,500, $12,500 divided by 2 for $6,250, $12,500 times 2 for $25,000, totaling $33,750. The mean term in which his capital is turned being about 18 months. Take another case. Say that 1/4 of the entire capital circulates in 10 years, 1/4 in 1 year, and 1/2 twice in the year. Then the annual expenditure will be $12,500 divided by 10 for $1,250, $12,500, and $25,000 times 2 for $50,000. Turned over in 1 year, $63,750. End quote from Scrope, Political Economy, published in New York in 1841. 6. Actual and apparent variations in the turnover of the various parts of capital. This Scrope says in the same passage, on page 141, quote, the capital laid out by a manufacturer, farmer, or tradesman in the payment of his laborers' wages circulates most rapidly, being turned perhaps once a week if his men are paid weekly by the weekly receipts on his bills or sales. That invested in his materials and stock in hand circulates less quickly, being turned perhaps twice, perhaps 4 times in the year, according to the time consumed between his purchases of one and the sales of the other, supposing him to buy and sell on equal credits. The capital invested in his implements and machinery circulates still more slowly, being turned, that is, consumed and renewed, on the average perhaps but once in 5 or 10 years, though there are many tools that are worn out in one set of operations. The capital which is embarked in buildings, as mills, shops, warehouses, barns, in roads, irrigation, etc., may appear scarcely to circulate at all. But in truth, these things are, to the full, as much as those we have enumerated, consumed in contributing to production, and must be reproduced in order to enable the producer to continue his operations, with this only difference, that they are consumed and reproduced by slower degrees than the rest, and the capital invested in them may be turned perhaps every 20 or 50 years. End quote. Here, Scrope confuses the difference in the flow of particular parts of the fluid capital, brought about by payment periods and credit conditions, with turnovers arising from the nature of the capital. He says that wages must be paid weekly out of the weekly receipts from payments for sales or bills. The first thing to note here is that differences arise with respect to wages themselves, according to the length of the period of payment, i.e. the length of time for which the worker has to give the capitalist credit, thus according to whether the payment of the wages is weekly, monthly, 3-monthly, half-yearly, etc. Here the law put forward earlier applies, that, quote, the quantity of means of payment required, and thus the quantity of money capital that has to be advanced at one go, is in direct proportion to the length of the payment periods. End quote from Volume 1, Chapter 3, Section 3, Subsection B. In the second place, it is not only the entire new value added in its production by the week's labor that enters into the weekly product, but also the value of the raw material and ancillaries consumed in it. The value contained in the product circulates together with the product itself. It receives the money form by the sale of the product and has to be converted once again into the same elements of production. This holds good just as much for labor power as for raw and ancillary materials. But as we have already seen, see Chapter 6, Section 2, Subsection A, the continuity of production requires a stock of means of production, which differs for various lines of business, and in the same line of business differs once again for different components of this element of the fluid capital, for example, for coal and cotton. Hence, although these materials must constantly be replaced in kind, they do not always need to be bought afresh. How often the purchase is repeated depends on the size of the stock invested in, how long it will last until it is exhausted. In the case of labor power, there is no such storage process. For the portion of the capital that is laid out on labor, the transformation back into money goes hand in hand with that laid out on ancillary and raw materials. But the transformation of the money back into labor power on the one hand and raw materials on the other proceeds separately on account of the particular purchase and payment periods of these two components, one of them being bought at longer intervals as a productive stock, the other, labor power, at shorter intervals, for example, weekly. Besides his production stock, the capitalist must also keep a stock of finished commodities. One way of disregarding the difficulties of sale, etc., is to assume that a certain quantity of goods must be produced to order. Even so, while the latter part of these are being produced, those items already finished lie in store until the time when others can be completed. Other distinctions in the turnover of the fluid capital arise if particular elements of this have to persist longer than others at a preliminary stage of the production process, such as drying of wood, etc. The credit system, which Scrope refers to here, modifies the turnover of the individual capitalist, and so does commercial capital. At the level of society, however, it modifies this only insofar as it speeds up both consumption and production.